they take 90% of your $1 million if you intentionally do the wrong thing. So I want to cover over on the tax side of things. So there's kind of a couple of different tax rates for super, and the two main differences, or two main, what would you call them, zones of a superannuation, is when you're accumulating your balance, and that's throughout the majority of your life, when you're contributing to super, building it up, and then you reach a point where you might retire or start drawing a pension. And then as long as you meet certain conditions, your tax rate literally turns to Cayman Islands, and you're paying 0% tax on your profit, which is pretty cool. So we can access 0% tax rates in super if the conditions are right. So I might, I just saw a raised hand. If you do have a question, I think Lisa, you popped your hand up, just pop it in the chat box and we can get that sorted. So yeah, so 0%, the kind of two, I'm not going to say this is all you have to do, and there's details with this, but if you're retired and over 60, generally your super balance will be tax-free on the profit that it earns. Now, the other thing that the government brought in a couple of years ago was actually that 0% tax rate is limited to $1.6 million per member. Now, the $1.6 million cap for the 0% tax rate, that's when the pension is created. So there's actually quite some complexity there with your pension balance and switching it to pension mode under that $1.6 million cap. But broadly speaking, if you've got husband and wife, they've got $3 million in their fund and they're about 50-50, or up to $3 million in the fund, you can assume that maybe most of that profit that will be earned, or the investment income, will be tax-free, assuming they're over 60 and retired. Now, I've also added a tax rate here on the right-hand side here, which is non-compliance. So I've never seen this happen, but I've heard it's a possibility where if you do the wrong thing intentionally, there's a 97% tax, or it's really tax and penalties, and it's not of your income, it's actually of the fund's assets. So if you've got $1 million in super, and it might earn 50 grand a year in income, they're going to take not 90% of that 50 grand, they take 90% of your $1 million if you intentionally do the wrong thing. So the penalties are huge if you disregard the rules.